Okay, this breakdown or this sharp fall was created due to the news of Adani Hindenburg, a sharp reaction. So this stands to be a selling climax where weak hands are panic selling and operators are buying. Additional, I will say, a bonus for them where they got the stock at very cheap prices. Okay. Finally, enter in phase E, which is nothing but extremely bullish phase. Action. This is the place where you should initiate your trades, or even you can add to your existing positions. This period of time we say that operator has built his position. Is operator going to start to book his profit at this location? You ask the right questions, you are going to get the right answers. Welcome to my channel of Contextual Trading. So today again we are going to see a technical analysis of one of the stocks. Okay, and yeah, let's start. So as always, please don't consider any of this as a buy or sell recommendations. The information is only for educational purpose. Okay. Yes, so today's stock that we are going to discuss is SBI, State Bank of India, and we are going to look at reaccumulation cycle of SBI. So what is a reaccumulation cycle? So for this maybe you can go and watch my previous videos of market price cycle. So market price cycle, I will put the link in the description. Market price cycle. Okay, so we know when the stocks are very undervalued, we undergo accumulation cycles, and then when they are over valued, we have distribution cycles. And during the markup phase, we go through short reaccumulation cycles. Okay, so this is one of the reaccumulation cycles that we are going to discuss. Okay, so let's start. So the stock is in uptrend, strong uptrend, and we come across a climatic situation where we see a strong gap up opening. All the weak hands are buying, looking at this strong uptrend, and they are trying to establish their position. While we see, as we reach the climax, we see that there is a strong surge in the volumes, and this is on account of operator selling. Okay, so how do we understand that operator is selling and no more the prices are no more going to go up? Is based on the volume signature with respect to price. Okay, now here comes the concept of effort versus result. So you see how much the effort is applied. So effort is nothing but the volumes that are generated, and the result is the price action. So if you see neatly, you will understand that there is a strong tail that has been generated, okay, in the price action. So this is nothing but the supply tail, we can say, which is generated due to the selling, and the close is also below 1/2 of this bar. Okay, so this indicates, and also the spread of this bar is very small. Okay, so if this was a very strong buying, looking at the volume, many of us might say that this looks as a strong buying and a demand. So if this was strong buying, then our price bar should have been closed at the very top of the spread. Okay, and we should have got a strong close. Okay, we should have got a strong close for this bar. Also, the price spread of the bar should have been very big, whereas we don't see in this case. So we know that there is more likely the stopping of this climatic trend. Okay, so we understand this, and therefore we label this as PSY, which is nothing but preliminary supply, which means that this is the first instance where we see supply coming in. However, we continue due to the momentum of the stock uptrend, and we form a buying climax, which is nothing but a climatic top, and we then go into automatic reaction. Okay, so automatic reaction, as we get the automatic reaction and then again we bounce back for a secondary test which is in the vicinity of buying climax to test the balance of supply and demand. As mentioned previously, we are always going to have the testing actions for the climatic situations. Okay, so here again we are looking at a situation of change of character. So what is a change of character? So whenever we are in strong uptrend, eventually when we get a strongest down reaction, if you see, this is the strongest down reaction in throughout our uptrend. Okay, so this gives us a understanding that now we might stop our uptrending and we might enter a sideways action. Okay, so this is the change of character in the first leg, I can say, where we understand that the uptrend is eventually going to stop and we are going to enter a trading range. So yes, so this is preliminary supply, buying climax, automatic reaction, and a secondary test. So as understood, so this change of character is going to define the boundaries of our trading range. Okay, so for us initially this is going to be the trading range that is going to be defined by buying climax and automatic reaction. So for us, we don't know what is going to unfold further, but yes, this is going to be a trading range for us as of now. Okay, but see what happens here. Okay, so this is a strong gap down, or not a gap down, I will say a strong breakdown due to an unexpected event. So this is if I remember correctly, 25th Jan 23. Okay, this breakdown or this sharp fall was created due to the news of Adani Hindenburg case. Okay, so yes, definitely there was panic in the markets. The weak hands were capitulating, and yes, so the weak hands were capitulating and the sharp fall continued for few days, and eventually operators took the benefit of this because they started to get the stock at a very bargain rate. So operators usually take benefit of such situations. Okay, whereas the weak hands are only going to panic and sell. Okay, so for this, how do we understand the operators are buying? You see how there is a sharp increase in the volumes. Suddenly there are increase in the volumes. We see the tails in our price action. We see how there is a sharp reaction. So this stands to be a selling climax where weak hands are panic selling and operators are buying, and there is a sharp reaction which is nothing but automatic rally for us. And of course, whenever there is a strong demand coming in or there is supply coming in, definitely this needs to be tested. So this is nothing but the test, say secondary test of the selling climax. Okay, so as already mentioned, we are always going to have a testing action of this climatic moves, and testing is nothing but the testing of supply and demand at those areas, and it always happens on the lower volumes. You see, this always happens on the lower volumes compared to this. Okay, so definitely the testing here seems to be successful, and immediately the stock bounces back to the trading range. Okay, excuse me, so to the previous trading range that was initially defined by the boundaries that we were considering. Okay, so this is really very interesting here, and this particular event, whatever was caused, this was an unexpected event. So how operators take the benefit of this event? This is a classic example of how operators take the benefit. Okay, so this is just additional part, we can say, which deviated from their original objective to accumulate these stocks, accumulate this stock. Okay, so this was trading range that initially the objective of operator, but this was an additional I will say a bonus for them, where they got the stock at very cheap prices. Okay, and see, as soon as the stock was accumulated as the news was absorbed, and eventually demand came in, and we are eventually back to the similar levels of our trading ranges. Okay, so this was our trading range. Okay, so yes, then here I will just quickly label again. So this automatic any secondary test, this was selling climax, automatic reaction, secondary test, and yes, we conclude here our phase A, which is nothing but the stopping action. Okay, yes, and we enter in phase B. Okay, so this was our phase A. So this as already mentioned, this the intention of phase A is the stopping action of the previous trend and entering in the, now we are entering in phase B. Okay, so yeah, so this tends to be again it can be either a sign of weakness, or rather I will label this correctly as secondary test in phase B. Okay, so we are always going to have the tests, and this stands to be the secondary test in our phase B. And yes, again we have a nice rally. We see how all the supply present here has been absorbed, and there is little bit increase in the demand. The stock rallies up to the end of our trading range, up to the top of our trading range here. And yes, as always, all the weak hands are going to jump in, thinking of this as a strong breakout of the stock, whereas this turns out to be upthrust action. Okay, so this turns out to be an upthrust action, which is nothing but just a temporary commitment above the trading range, and again a failure. Okay, again a failure in the trading range. So this turns out to be an upthrust action. So this is a mechanism carried out by operator in order to trap the weak hands. Okay, so these mechanisms are deliberately conducted by an operator, so that the weak hands are trapped and more liquidity is generated, so that he can accumulate more of the stocks. And see how, as the upthrust action is completed, how sharply the stock falls down. Okay, and there is again increase in the volume. So this indicates us that again a capitulative action has taken place, just like this. And as there is increase in the liquidity, the stock is been absorbed. Okay, now one might say that we don't see any buying, how we can say is we don't see any buying indications here. We see that the stock remains weak, we see that there is increase in the supply here, as there is increase in the volume, but we don't see any buying tails for the candles. Okay, but you see, if you understand the volume and price action together, how it works, you are going to understand it well. Okay, so in this particular scenario, if you were to see this bar, yes, definitely there is strong increase in the supply. At the same time, you see the another next bar, which is more or less like more than one half of this bar. Okay, so if this bar is total height, you will see the next bar is more than half of this bar. Okay, which indicates that it is also equivalently applying effort. As we have seen previously that volume stands for efforts, and the price action that we are looking is the result of it. Okay, but you see for the second bar, I am speaking for the next bar after this huge climatic bar, the next bar, you see the price action, it is very very small. Okay, and we are also not getting a good follow through. However, we see a small follow through, but again it was rejected, and again the market spent time here, but we are not getting a strong follow through towards the downside, right? So why is it that why are we not getting a follow through? If this was actual selling, if this was the actual selling, why are we not getting the follow through? It is because you see the operator is actually buying in this region and not selling. Okay, of course there is selling. It is not that there is no presence of supply. There is selling, but if you see the volumes properly, you will understand that these volumes are having some hidden demand, we can say. How do we understand that there is hidden demand? Because the prices are not reacting to the strong supply. So if this was a strong selling, we should have got a strong follow through on the downside, but we are not getting that. This is a clear indication to us that there is a strong support by operators at this place. Okay, so this is how we should be looking at the volume and price action together and deduce from our observations that what exactly operator is doing. Just because we see strong red bars, it clearly does not mean that there is selling, and if we see strong green bar, it does not mean that there is buying within those. Okay, so here we understand that there is a strong support from operator. The stock continues in the phase B and eventually falls sharply down, entering in phase C. So here we conclude our phase B. Okay, here we conclude our phase B, and the intention of phase B is nothing but just interaction of supply and demand, and the operator is just trying to fulfill his objective within this phase B. Okay, and what is phase C now as we enter in the phase C? So see how the price action unfolds as we enter from phase B to C. The price falls sharply down. Okay, it falls so sharply that it breaks the previous low of the trading range, or we can say that the support of this trading range. Okay, it breaks the support and it penetrates through it and immediately bounces back within the trading range. Okay, this is called as spring action, and this is carried out by an operator to mislead the public. Okay, as the stock is falling here strongly, the weak hands feel that the stock is no more going to go up and it is going to continue falling down. Therefore they close their positions, and as again operator is waiting on the other side to accumulate his stocks. Okay, so this usually happens at the very end of the trading range. Okay, and just before marking a markup phase, operator carries out this mechanism. Okay, and yes, as always, if an action is carried out, this is our spring action, and definitely this needs to be tested. So we come back again, this creates a higher low test, of this spring action, and yes, we continue in phase D. Okay, so see carefully, again we should have these observations in our mind whenever we have a spring action and a test. Always we should get on the low volumes. Okay, and yes, again we enter here in phase D. So here we conclude. Yeah, maybe I can draw a little bit better here. So here we can say, sorry, my bad, it is exactly after the finish of the test that we conclude our phase C. Okay, so this remains our spring and this remains our test, and now as we enter in phase D, we unfold a strong sign of strength. Okay, see how there is increase in the volume, how there is a sharp rise in the prices, and the sharp rise in the prices actually break the top of the trading range. Okay, so if we see here, this is our top that we defined initially, and now the sign of strength breaks our trading range into the open vicinity where there is no supply, but of course supply is going to generate in this rally as well, and there are going to be many other weak hands that are going to sell here. They are going to book the profits, therefore supply is going to generate, and then we are going to get a backup action, or we can also call it as LPS, which is nothing but the last point of support. Okay, so this is the price, exactly the behavior that we would like to see. Okay, how sign of strength develops, again backup action. And conventional traders call this as nothing but a retest. Many of you might have heard of this word, a retest of the trading range, and then the stock is going to go up. Okay, so this in conventional terms many call this as a retest, but as a Wyckoff methodology trader we call this as a backup action, or LPS. Okay, and here we conclude our phase D. Okay, so I will just clean this up a little bit, and here we conclude our phase D. This is phase D, and we finally enter in phase E, which is nothing but extremely bullish phase. Okay, and yes, you see, as a trader we are supposed to build our positions within these phases. Phase C, oh sorry, so yes, let me redraw it again quickly. Yeah, so as traders we are supposed to build our position in phase C, phase D, and phase E. Okay, so phase C is definitely you should be having very strong technicals to understand that this is the action of spring and test, which is actually very difficult. Therefore it is not recommended to build position in phase C. Okay, but phase D, while we are within our upswing, this is the place where we as a trader should build our positions. Observe if we are going to get a backing up action. This is the place where you should initiate your trades, or even you can add to your existing positions. Okay, here you can add, then you can again start to build your positions in the phase E, and so on and so forth. Okay, and yes, this is the result. Now for those who think SBI is, or many of us are there who might feel that this looks very extended. Okay, for many of us, those who are in confusion whether this is the right place to buy or not, or etc., or so and so. Okay, so this for many of us might be looked at as a overvalued situation. Okay, but logically, if you think or if you have the contextual understanding of the stock, then just understand, if we are saying that operator has built his positions from starting from here to here, so this remains our causality. Okay, so this is our cause, that over this period of time we say that operator has built his position. Is operator going to start to book his profit at this location? So this is very logical. So you guys think, I am not recommending you to buy or sell, it is all up to you, but this is very logical question to be asked. If when we say that operator has bought for almost more than a year, and now we are entering in a markup phase, so understand whether operator is going to book profit only for this much percentage of profits, because he has accumulated for over the entire trading range, and now we are in the markup phase. Okay, so these are the kind of questions that one should be asking while analyzing the stocks or while building the positions. So if you ask the right questions, you are going to get the right answers. Okay, and that's it, I think. Analysis, next slide. I have just given the labeling for the analysis that we did. So maybe here you can see quite some volume information that I would like to add here. You see how we as we pass from phase A, B to C, we see that there is a dramatic decrease in the volumes. Okay, so this is very important. We understand by the decrease in the volumes that the stock was under reaccumulation phase, and we can expect a strong outcome out of it. Okay, so I think this is it for this video. If you like the video, please like, share and subscribe, and do comment in the below section if you have any queries, and see you later in the next video.